Okay, folks, good morning and welcome to Swing Trading Today. I didn't do a best stock charts over the weekend. I had family over, so I needed to do a push into this morning. So let's begin first with some best stock charts, which are the charts that I like. Moving into the new trading week, we have a mix of continuation breakout trades as well as extreme oversold trades and one extreme overbought trade. So let's get to it. It is at current 5:04 in the AM Eastern Standard Time, November the 12th. And we'll begin with TMQ weekly chart. TMQ we have spoken about before. Last week it flashed a bullish key reversal bar. We're looking for a continuation breakout this week. RSI in its tight consolidation appears to be poised to break out. Stokes beginning to hook back up again. So that means momentum is beginning to gather steam. Stoke RSI strong, volume a bit weak. Ultimate Oscillator hooking up. TMQ looking good. Now to time these trades, we need to take a look at the daily chart and the intraday charts. I went over those with members yesterday on the week ahead commentary. If you're not currently a member, sign up. It's posted on the premium area for members. If you're already a member and you're watching this portion of the video, you may want to just skip to the pre-market activity later on in this video and go check out my deep dive of all of these symbols I'm going over right now on the week ahead commentary. You get a lot more depth of analysis. The next chart up is AVGO, Broadcom. We have been in a consolidation for a couple of months now, a few months now. We have a W formation forming. This is not a buy yet. If and when we pierce 252.14 and even better, 260, that sets the stage for a longer term breakout. We have Stokes, which are now rising. RSI is putting in higher lows, no higher highs yet. So we do not have momentum at our back yet, but it is beginning to build on our indicators. Great candlestick last week. We did close below the 50-period moving average. That is acting as resistance. We closed out the week up at 8.25%. Volume, though, dropped off. So right now, Broadcom, while I like it, it remains a watch. It needs to prove itself worthy of being added to our portfolio by being able to break through resistance. More to come, members. Fiserv, FISV. It broke out last week above this upper band of resistance. RSI back above the 50 level, which is bullish. Stokes still below the 50 level, but we have history here of the Stokes doing V-shaped recoveries like back here, like back here, like back here. Really good volume last week. That's institutional demand. I would watch to see whether or not all of these companies have already reported earnings. So Fiserv looking good from that higher level view. Again, folks, we need to drill down to a daily chart and intraday chart to time our buy. But again, multi-period chart views of these symbols were done yesterday on the week ahead commentary, posted in the members area. So Fiserv looking very, very interesting. Avalon Bay Communities, a big rally and a breakout last week, up 5.4% on the week. We did close out resistance, so what we're looking for here is a new weekly high, and more importantly, a close above this resistance level here. Because all that we're confident in right now is that we are in a trading range and that we are at resistance. We don't know whether or not we're going to get follow through here. So tread with caution. I'm very optimistic, but cautiously optimistic. Double bottom setup on Williams percentage R looking good. We broke out last week. Volume a bit light. Stokes higher lows. Double bottom setup at the 50 level, and it broke out last week. Very bullish stuff. Avalon Bay looking strong. Unilever weekly chart. It's been in a long-term consolidation, an ever-tightening pennant formation. A good week last week, up over 2%. We closed at the highs of the week, which is not the case for many of the sectors and indexes out there. Even healthcare, which was strong last week, came off the highs of the week. We know we have resistance above at the $56 per share level. So what we're looking for is a breakout above that level and, of course, a close there. then we will defer to our daily charts to identify where the best risk-to-reward entry point will be. Are we breaking out and retesting support levels? These are the questions that we want to ask ourselves before we get long. Prologis, PLD, we broke out last week above $66 per share. That had been acting as resistance for a while. We did break out here back in July, but that breakout subsequently failed. But we are now back. We are looking at the $68 per share level as our next resistance level. Again, these are weekly charts. Do we break out or do we remain in this long-term trading range? There's no sense in putting on a trade right now knowing that we have resistance above. But we will be taking a look in the coming days at the daily and intraday charts, discussing whether or not these shares are worthy of being added to our portfolio. So PLD looking very interesting. Not ready to be bought yet. No breakout yet. Very close on RSI. Stokes hooking up. Good stuff. Volume was very low last week. Dorman Products, weekly chart. We broke out last week. The fourth consecutive up week. Generally, when you get a rally like this and a breakout, you're going to get a pullback and a retest of this support level. So I wouldn't be the least bit surprised to see some consolidation here along this upper band of resistance at, let's call it, $83 per share. And then we'll look, if we manage to retest support and then begin to build up some steam to the upside on a continuation breakout above last week's high, we will look to open up a long position. Volume was weak last week. Stokes looking outstanding. MACD looking good. How's our RSI? RSI is okay. Members, more to come here. Now let's move into our extreme oversold stocks. And with our extreme oversold stocks, I usually go over the daily chart to discuss the whys of why I like the stock. Just as we just did with the continuation breakout trades, we were looking at the weekly chart, screening by their performance on a weekly basis because that's the higher level view of how they're performing relative to the S&P 500. Weekly charts smooth out the daily noise. Now, as to the extreme oversold stocks, these are shorter term trades. So we're going to want to look for setups on a daily basis because the reasons as to why we like the shares are specific to the daily charts generally. And what does that mean? It means that they are extremely oversold on a daily basis as measured by RSI and to a lesser extent their positioning relative to their third standard deviation Bollinger Band. I put far more weight on the RSI than I do the Bollingers. Now, volume last week was very, very high. So we have institutional distribution. RSI, though, is at 13.84. Can it go lower? Yes, it can. And the Stokes are indicating that they may. The one upshot here is that we are putting in higher lows on RSI, but we're also putting in lower highs. So what do I give more weight to? I give more weight to the lower highs. Why? It's because the trend is down. So the probability of more selling pressure is likely. So that means that the probability of Stokes breaking down below support is pretty high. Now also, these volume bars are telling us that we have not mom and pop distributing shares. We have institutions. We can't fight these guys. So I would expect to see more selling pressure this week on CNDT. Now, the bottoming action is pretty good. We have been rallying off the lows of the days for 3 consecutive days. Big bottoming tails. It's hard to see here. You can see on the 7th we were as low as 12.18. We closed at 13.62. On Friday, we had a low of 12.46 and closed at 13.04. So we're seeing some buyers move in here or shorts covering at this level. Now, to confirm where we have historical support, we need to take a look at a weekly, monthly chart, which I did yesterday on the weekend commentary. It's posted on the members area. Again, best stock charts are the whys of as to why we like a specific stock. The week ahead commentary, which I review with members, is the why plus the strategy for entering a position. The next chart up, Forrester Group, RSI at 12.63, extremely oversold. A lot of technical damage done here, but I think we're going to rally fairly soon. Perhaps not today, because the price action on Friday was pretty bearish. We closed at the lows of the day. We were down 10.16% on Friday alone. We closed down below the third standard deviation Bollinger Band. This is unsustainable to the downside. Volume was high. That doesn't mean we can't continue lower, but I am expecting a reversal day at some point this week. Stokes rolling over below 20. That's pretty ugly stuff. So I am predicting lower lows, but we will also see, in all probability, a rally at some point in time this week, and we'll look to get long of Forrester. When we see it hit historical support, A, then B, when we begin to see a reversal day, a bullish key reversal. That's what we're looking for on the candlesticks. What is a bullish key reversal if you're not familiar with candlestick charting? This is a bullish key reversal. Perfect. Classic. April 3rd, 2018. You can see that we were in a big long-term downtrend. April the 3rd, 2018, bullish key reversal, and we went shooting higher. That's what we're looking for here. It could happen today. NN Inc. daily chart, another extreme oversold stock, RSI 15.67. Stokes are declining, and they're trading now down below the 50 level. We are trading well below the third standard deviation Bollinger Band in red. The reason why is because of this volume. But I can assure you that this downtrend in the very short term is unsustainable. At some point in time this week, we are going to get a counter trend rally. The key here before you decide to go entering a position is to identify where there is historical support, because this volume will crush you if you are not buying at a support level, because you need reservists. What does that mean? It means that when you hit a support level, historical support, or if it was at one time a resistance level, it should now act as support. You're buying where other technicians like me are looking to scoop in and bid the shares up. It's not just you swimming out from the coral reef like Nemo and swimming the oceans by yourself, because the probability of you surviving is improbable. You need to stick by that coral reef, to use the analogy, and buy where there are other like-minded people at a support level. I hope that makes sense. I don't use analogies often, so give me some credit if it was good in the comment section, please. All right, what else do we have? I think this is the last one. Yeah, it is. Vivo, this is Meridian Biosciences, VIVO. This is an extreme overbought trade. Possible short, RSI at current 91.45. We are trading and leading into the third standard deviation Bollinger Band. Again, folks, this is unsustainable to the upside. Now, I can tell you one thing. I went over this chart on a weekly or monthly basis yesterday. I forget which. And we are in the process of breaking out of a long-term consolidation. So I think that we are going to get a pullback. However, on that pullback, I will be looking to get long of Meridian longer term, because it's a really outstanding chart from a, I believe it was a weekly basis. Really, really pretty. So in the very short term, we're looking to short it, to scalp a profit because of its extreme overbought condition. However, after a consolidation, and it may not be this week, it may not be the following week, it may not be this month, after that consolidation, and we begin to show signs of life again, and we begin to break out and resume the uptrend, well then, I plan to be on board with VIVO to the long side. Right now, though, we're looking to short it. Volume is still strong, so it's under accumulation. And we could quite possibly have more upside here. MACD continues to grind higher. So I doubt I'll be shorting it today. It's not impossible, but the indicators are not telling me yet that the time is right. Besides the fact that I have a historical resistance level, which I mentioned to members on the week ahead commentary, that we're looking to use as our price target to short into. So if you're not currently a member, join up. It's in the members area on the week ahead commentary. Now let's segue over and into the pre-market activity. Okay, let's kick the pre-market analysis off with the U.S. dollar. The U.S. dollar has a new weekly high. These are all 4-hour charts. A new weekly high, yet we are trading above the third standard deviation Bollinger Band. Expect a pause or a pullback on the U.S. dollar off of these levels. This is a strong chart. I'm not saying that the rally is over, but it is due for a pullback off of this overbought condition. As you can see here, when you pull back, you can see that this rally has truly gone parabolic, similar to this rally here, which began September the 26th, and we peaked out here on October the 3rd. Now, if the dollar is rallying this strong, that means we have ongoing weakness over in the Eurozone. Man, they're a mess. I know, no offense to our European viewers, but this is a disaster area. We did hit a support level. We're beginning to consolidate now. I guess my orange is my color of the day here. And we're beginning to bounce some. So I would expect to see a bit of a relief rally on the euro. By no stretch of the imagination do I believe that the sell-off here is over. Now, if we begin to rally up and through 1.1375, okay, then we may have the beginning of a rally here longer term on the euro. But right now, this is just a disaster area. This bar here, which was green and opened up 32 minutes ago, has now gone red. I think it should hold this support level, but I wouldn't be surprised to see a break. Now, when I see the dollar strong, I want to take a look at commodities. Gold getting hit this morning. When I went to bed last night, it was up despite the strength in the U.S. dollar. It's given up those gains. It is down $1. We are holding support, and we do have a new weekly low. So that's not really that good to see, a new weekly low. So right now we're trading at a support level, which we last saw back in October on the 5th. Let's see whether or not this holds. Let's check out oil, which has really been taking it on the chin. We'll go with the light sweet. Wow, this is just a disaster area. We had bounced. We are now pulling back a bit. We are up on the trading session, but off the highs of the session. Taking a look at the futures market, stock market futures, S&P 500. We were up. We are now down on the session. We have a possible inverted head and shoulders setup forming here. Left shoulder, head, right shoulder forming. Now, if we break 2760, that inverted head and shoulders setup is in all probability gone. But if we rally up and through 2817, then it may be game on for a rally in the S&P 500 or on the S&P 500. Taking a look at the NASDAQ. The NASDAQ is up 11.5 points right now. We are off the highs of this session. This prior support level, which broke on Friday, is now acting as resistance. So we're getting a pullback from the highs of the session. RSI, very weak. It rallied, failed to break out, consistent with price action. Let's leave off with Bitcoin. We haven't visited this one in a while. Not much to talk about here. I heard another analyst. I know Tom Lee had a price target of 25,000 on Bitcoin. Somebody else came out with a similar number late last week or over the weekend. There's not much going on here. Really lethargic trade. When I would become interested in Bitcoin is a rally up and through resistance here. Right now, all we're doing is consolidating within this triangle formation. So there's really nothing to be done right now. I wouldn't buy it. I wouldn't short it. And that is it for the pre-market activity. I need to go back and do one more chart for one of our members, which I just remembered. LTS for Jerry. Okay, all I need to do here is take a look at the weekly chart. And this is kind of the opposite of a bull flag formation. Let's call it a bear flag formation, right? It's the inverse of this here. which happened to fail. This is a bull flag formation which failed. This is a bull flag formation which succeeded. This is a bear flag formation. You're seeing a lot of topping action here, meaning that there are sellers above, buyers back here want their money back, and they are selling into strength. I would not buy these shares. I think there's a good chance that we break. Now, we do have a higher low on Stokes weekly basis. I just don't see the edge that we have for buying a stock to the long side that has a risk reward that is in our favor. If anything, I'd be looking for a break of this lower band of support, and if you can get the shares to short, I would look to short it. So I would look to short on a break below $2.70. If you can get the shares. Daily chart. All right, so again, bearish price action. Friday we were down over 4.5% alone. We are at a support level. If we break this lower band of support and close there, it'll set up as a short, and I would look to short on a break below $2.72, because in all probability, if we break that support level, we're coming all the way back down here, if not lower. Volume on Friday was very light. So for a big percentage down day on Friday, the volume action was very light. So just be careful here if you decide to short the shares on light volume. It may be difficult to get out of this position. I mean, really, only 168,000 shares traded on Friday. Too much risk to short this stock. Not enough liquidity. So I wouldn't even short it. I would just avoid this. Because God forbid you need to cover those shares. They're going to really squeeze you hard. I would avoid. And that is it for today, folks. Everybody have a profitable trading day, and I'll talk to you soon.